Alright, first and foremost, if you guys saw my Imagine Core video from yesterday about augmented reality, congratulations on making 30%. I think earnings season has been unusually good, especially for a 20-year-old business when they've made 44% year-over-year growth. That's not bad at all. On top of that, they've announced that they have tier 1 consumer-driven partners who are interested in their technology, so I think I'll be holding on to the stock. But I completely understand if you want to reduce your risk a little bit and sell some shares. But thanks a lot to Tashi for this great find, an avid learner and a contributor to the 11ish Collective. Now to the meat of this presentation. Disney has just came out with their earnings and had some very interesting things to say. In this video, I'm going to talk about what my thoughts are in terms of the next steps. If you're a long-term investor who's interested in investing and then forgetting and then just paying it out as a retirement fund, I strongly believe that your money is still safe. But for the rest of us who are investing on a 3 to 6 month basis, let's talk about it. If you've been following along and invested when I recommended it, congratulations on making some money as well. So by the saving grace of investing into a business with good fundamentals, even when we're speculating on the performance of a company in a very short time frame, because they have good fundamentals, we still manage to make some money. That being said, they did lose quite a bit. The revenue slumped by 42%, and at the same time, because of their good business model, their adjusted earnings actually came out positive. And because of that, it was a surprise to the analysts, and therefore the stock price was affected positively. For you new investors here, if you're playing the pre-post earnings game, the only way for that stock price to jump post earnings report is if there's a surprise element to it. If it's just positive, if it's just business as usual, then the price is already built in. In this case, basically Disney was less negative than the analysts anticipated. So therefore the stock price went up. Okay, now like most of you, I've loved the Disney brand since I was a kid, and throughout my personal life cycle, Disney has made a bunch of powerhouse acquisitions and has always been on the forefront of tweaking and pivoting their business so that they outlast the competitors. They continue to grow their business and has been very successful in doing that. Furthermore, they have $12 billion worth of cash and credit lines lined up just in case shit hits the fan, so that I definitely think they have enough staying power even if the worst case happens. This is why I think it's a safe bet if you're a long-term investor who doesn't want to play the swing game of this intermediary period. But for the rest of us, what Disney has just announced is worth examining. Specifically, it has to do with them cutting down on non-core business functions. Specifically, this will mostly affect home entertainment and channel distribution, a lot of TV channels like foreign TV channels, for example. And usually I would applaud this effort, especially if you go to the career page. They have 2 pages worth of product managers as open recs, which to me is a strong indication that they have a vision in mind and they need to hire new product owners to execute this vision. That's really, really excellent to me. However, if you pair that idea with an estimated 4,000 jobs that they might cut and up to a $2 billion worth of savings that they're expecting, I feel like they're about to cut off the limb to save the torso right now. Because as I understand business, they're not going to go this dramatic, this drastic, unless there is a really damaging trend that they see internally that has led them into starting to execute this value cutting. It takes a lot of balls to do what they're doing. At the same time, they're trying to keep things alive, right? They're trying to open theme parks to the best of their ability. They're signing contracts and helping sports teams play in safe arenas, even though it's not ideal. Creating virtual viewing experiences, helping ESPN along, etc., etc. Do I agree with what they're doing? 100%. But it definitely feels like they're cutting very, very aggressively in order for them to protect the longevity of Disney as a whole. To give you an idea of how much I believe in Disney, between my long and swing portfolios, I was trading on $150,000. But because of this latest earnings report, I gotta be honest with you, I sold my stake. Because the way I see it, yes, it makes sense as a long-term growth strategy, But COVID is not slowing down, as I say in every single video. Many people, much more reputable than I am, are saying that we are in a recession, where I at least think that we are at the tip of a bubble. And I think that this bubble will sustain itself as long as the Feds continue to pump money into the economy. I think, though, the challenge here is that after the presidential election, there is way too many unknowns, and there likely will be a cutoff. And there will likely be a disaster right after the election, because it behooves Trump to pump the economy up so that he has a better chance of winning. That's not just a Trump thing. Guaranteed every president will do that. Which means that after the election, I don't know what the fuck is gonna happen, but I'm concerned as hell. And that is not so far away from now. My advisors are telling me that if the schools reopen like they're planned to, COVID is gonna kick up. If that does, then the lockdown is gonna be even worse than what we're experiencing now. Now, do I believe in that? I'm not 100% sold. But then again, I'm not 100% confident that it won't happen either. And if you're like me, where you think that there is at least a 50% chance of this happening, I would consider reducing your exposure in the open market. Everybody I know is expecting another drop. And we're not sure how it's going to drop, how it's going to play out. But the fact that there is creates risk and also creates a buying opportunity. And that's effectively what I'm looking for. That being said, there are definitely businesses that are thriving during this COVID crisis. They're not just playing the bubble game, trying to get the consumers' money. And I will continue to talk about those investment opportunities with you guys. All right, so that's all I wanted to address in this video. If you have any questions or concerns, please leave a comment. And if you have any requests, hit that subscribe button and then leave me a note as well. I will definitely hit you back. Thanks for watching, stay safe, and good luck with your investments.